As we end the year, we look ahead to what's next for 2026. Bennett Jones has released their outlook, showing new realities of the U.S. and Canadian economies. We're joined by Paul Beaudry now, Senior Economic Advisor. Bennett Jones, also former Deputy Governor of the Bank of Canada. Thanks for your time.
Thanks. Happy to be here.
Was a 2025 story, you think, more about AI or more about tariffs?
Well, I think the surprise part was the role of AI, in the sense that tariffs still for Canada is really big story, and we were kind of seeing it coming and everything. But I think the aspect of the size of AI and how big it's become, especially in the U.S., and how it's transforming, whether we're kind of in a bubble situation or not, or whether we're in a transforming economy, that's a really big change. If you look back a year ago and there was discussion on that front, that was a kind of a small aspect. And so it's certainly the biggest news over the year, but still for Canada, tariffs is a really big kind of issue.
How do you see then the AI story evolving for next year?
Well, this is it. There's really risk on different sides. When you really look at the amount of money being put in and try to calculate whether it's the firms that are putting that money in that will actually be able to recoup enough of a return to justify the values that they have on the stock market, is, it really takes a bit of optimism. It's possible. There's kind of reasonable scenarios where it could happen, but it's quite optimistic. That's even in the case where AI itself gets kind of taken up a lot. Up to now, we're seeing AI being taken up in small parts and everything. There really has to be kind of a movement more widely and really kind of having revenue kind of coming in to support this amount of investment in the background. So we'll really see. It's a risky situation. My guess is it'll continue on for a while because there's a lot of momentum, but people should also have a good look there of what firms are really kind of creating a market for their product.
I'm going to lump tariffs and CUSMA together, and I'm wondering how you think Canada needs to position for 2026. We're going to presume that there's going to be a CUSMA negotiation, although that is not necessarily confirmed.
No, you're exactly right. We don't know, but I think that's the right way of kind of posing it, that there will be some kind of renegotiation along that line. I think it really is to the gain of Canada right now. We've been kind of patient on many of these fronts. It's, for a lot of people might be worried, it's taking a long time to get a new kind of deal and kind of starting to get that renegotiation going. But at the same time, the costs of tariffs are starting to show up in the U.S. And so there's going to be more and more pressure to kind of relieve some of those costs. And that's a good situation to be in when kind of renewing or kind of rediscussing CUSMA, as there's kind of the understanding of the cost of kind of putting up these tariffs. And so I'm actually still optimistic that reality of the cost of tariffs, the value of Canadian products for the American consumer, and a lot of our products go through firms, but indirectly kind of benefit the American consumer. That's going to be a push. And as we get more political pressure, maybe we can get a reasonable deal. Now, at the same time, we have to expect that there will be asks from the Americans. There will be things that we'll have to give up. But yeah, hopefully we can get something going on that front.
Better or worse, do you think, if we stay in a scenario where CUSMA doesn't necessarily get renegotiated, but Canada escapes a lot of the tariffs from the current agreement? Or does that just add too much uncertainty to the forecast?
Well, it's certainly, uncertainty is never a good thing. So having a lot of uncertainty about CUSMA is not a great thing. But if it's kind of stayed where we are right now, what we have right now is a situation where a lot of goods do not have high tariffs. We're one of the countries that have the lowest tariffs with the U.S. right now. So overall, it's not a horrible situation. The uncertainty about that makes investment kind of really a lot of people reluctant to invest. It also makes certain sectors, as we know, there's certain sectors that are really hurting in Canada, whether it be the auto sector, the steel sector, aluminum, wood. So we have sectors that are being hit. But again, in some of those subsectors, I do see the room that maybe some of those tariffs could be reduced. We're getting some of the pressures, again, on costs of things like steel, aluminum for the Americans are pushing things up. Maybe we can get a better deal on that front. But, if we could kind of keep an average tariff rate as about the levels we have right now, it wouldn't be a too bad thing for Canada.
Sometimes just flying under the radar seems to be best in these situations. What about the private sector? We've talked a little bit about what situation the government will be in looking ahead. What about the private sector? What do they need to focus on next year, or what needs to happen there?
Well, on a lot of those fronts, as we're seeing, there's, kind of a new atmosphere that's coming out of Ottawa. Hopefully, it's supporting more the idea of needing to invest, and that investment really has to come from the private sector that comes and supports and kind of develops things. Certainly on the energy front, we're getting a kind of new view. Again, when we think about AI in the U.S., a big part of AI build out will really require more energy, and so anything that Canada can kind of help and contribute on that aspect will be possibly positive. Obviously, we want to diversify at the same time, but that doesn't stop from the idea that maybe we can kind of help bring new goods or new energy up to the U.S. too in the future as AI needs it.
What do you think the U.S., on the flip side, needs to focus on for 2026?
Well, so I think it's kind of the affordability issue. We've kind of seen it. Not that Canada doesn't have an affordability issue, but there's really an affordability issue also in the U.S. in this aspect of having tariffs that are increasing the price of a lot of things. We're seeing the labor market slow down in the U.S. Those are all things that are kind of saying, maybe rethink about the economic strategy they have to really help on affordability.
Okay, I'm going to leave it there. I'm out of time with you, sir, but thank you very much for joining us. Paul Beaudry, Senior Economic Advisor now at Bennett Jones.